Joined live from Hong Kong by HSBC's Frederic Neumann. Hello, Frederic. Thanks very much for joining us. So, first of all, tell me what you make of the Bank of Japan's action this morning. Will it work?
Well, I think it remains to be seen. The Bank of Japan had very limited options at this stage. We already have very low interest rates. We have had years and years of support by the BOJ. So the hands are really tied to some extent. They did offer the market a little bit in terms of supplying more funds into the market. But whether this will really come to, A, the rescue of the economy, or will really have a desired effect on FX markets, I have my doubts at this stage.
Well, this is it. They doubled the size of this program back in March, and it didn't have much of an impact on the yen at all.
That's right, because it is in the grand scheme of things really a smaller program. And what we saw in FX markets, generally what works is if you have central banks intervene on both sides of the equations, that is in a G3 or G10 realm, you want to have not just a BOJ intervene, but the Fed and the ECB as well.
And Frederic, there's absolutely
weaken the yen.
There's absolutely no chance of that happening, is there? Because it pretty much suits everybody to have a weaker currency right now. Somebody's got to take the hit.
That's right, and therefore the hands of BOJ are really tied. They can't really unilaterally control the value of the yen, and I think ultimately the impact, therefore, of this particular policy measure today will be relatively limited. And it's also notable, I think, that Shirakawa came back from Jackson Hole apparently with no agreement on the currency issue as well.
So if they can't do anything to weaken the yen, if that's out of their control, then they've got to do something to bolster growth to try to cancel the negative impact of the higher yen. So what can they do on that front? I mean, we know the government's talking about a stimulus package, perhaps a supplementary budget to make that happen. Could we also see the Bank of Japan buying government bonds?
I think ultimately it's all heading towards more government bond purchases by the BOJ. And those government bond purchases will, to some extent, are designed to help tie down the long end of the yield curve. But it's also really to directly help the government to spend again more. We need to generate demand in Japan. On the fiscal side, we already have some concerns about excessive debt. The only solution now on the table is really to use BOJ money to help drive up government consumption.
Yeah. Fred, were you encouraged by Ben Bernanke's words over the weekend in Jackson Hole? Do you think that the U.S. is going to need more stimulus?
Well, I think it is a wait and watch attitude here. And to be really fair, I think the data out of the U.S., while pointing towards a slowdown, is not quite so bleak at this stage that we would really need quantitative easing. As the chairman rightly said, we have to await further economic data. The non-farm payrolls this week will be key, for example. It's by no means clear that the U.S. is headed for a double-dip recession, and therefore at this stage we just wait. We'll see what the data says. But ultimately, Bernanke has made it clear that more Treasury bond purchases are on the table.
Frederic Neumann from HSBC, senior Asian economist there based in Hong Kong. We really appreciate you joining us.